Forex Focus brought to you by IG, taking a look at the ongoing Australian dollar crash and going to do a little bit of research on how low it could go historically speaking, and then take a look at what futures options traders are saying about where they think Australian dollar prices could be going in the future. First, let's give you some context for this crash because it's been a negative almost 5% move on the year, which you might say, Frank, that's not a lot. Well, down 5% is a good amount for a Forex market. And then also keep in mind the historic upside US dollar saw last year, or downside Australian dollar, euro, pound, yen, all these major currency markets saw in 2022. You tack on another 5%. It's been a rough go for Aussie and a number of other major currencies. And also a 10% down move from the highs that we saw, and now toying with trading under 64 cents here today. Really feeling like this Aussie is in a little bit of free fall and has myself and probably a number of people wondering how low can it go? How low will it go? Well, we don't know necessarily how far it will go. We can't say where it's gone in the past. And in the last 20 years, the Aussie on a monthly basis, a monthly chart, has closed below 64 cents just once. That was around the start of the pandemic there in 2020. You can see that we've toyed with 64 cents a number of times. They've traded on a daily basis below 64 cents in the last 20 years a number of times. But on a monthly basis, hasn't closed below it only but once, which tells you that this is, historically speaking, kind of an important price that they've touched on and had some maybe volatility around. Now you go back to prior to 2003, and there are plenty of months they traded below 64, and they actually got down to 50 cents. So historically speaking, you go back far enough, and this market can really go wherever. But in the last 20 years, rarely below the 64 price. And then, of course, like I alluded to, you go back earlier than that, and the lowest monthly close was around 49 cents. So still a decent distance it could go, but like I say, pretty rare prices we're seeing for Australian dollar as we speak. Now, I thought it'd be interesting to take a look at the CME Group's Australian dollar futures options and see, what the big numbers like 60 cents or 50 cents look like in terms of their delta, which can theoretically tell you what options traders are pricing in as the percentage chance the market closes below that price by expiration. And so I looked at the first expiration of 2024, which is January 5th, and just said, okay, well, the options for January 5th, 2024 will give us a little approximation of the chances people think of Australian dollar being at these prices at the end of the year, right? It's one of the first trading week of the new year, and the delta on the 60 cent puts was about 12. So about a 12% chance traders are thinking that this market could close the year below 60 cents. And then I also looked at the 50 cent puts, and just a 1% chance. So big outlier, 3 standard deviation move options traders are thinking on that one. But, that is something. It's a percentage point, as opposed to, most of the time you would guess that there's essentially a 0%, just a little bit, as small as you could really get theoretically, of this market getting down to 50 cents, because it has not happened in the last 20 years. And so outliers, yes, but still some semblance of a chance that traders think this market could break 60 or even 50 cents, which has historically just not been done. And I wanted to give a little bit more context to this Australian dollar crash and its potential to even get worse, because you look at historically the correlation between gold and Australian dollar, and you can see, especially prior to the pandemic, pretty clear, right? Gold and Aussie moving higher together, moving lower together. Gold obviously tends to be a more volatile asset than a Forex market. So you might see some bigger swings in that gold market. But generally moving together, and they have a positive historical correlation. And gold, as you can see there in that black line, it's been moving lower recently and probably accounting for some of the Australian dollar bearishness that we've seen in recent weeks. You'll also notice that gold is still trading around $1,800 to $1,900, which is historically high. If this gold market coughs up some more ground, you could see this Aussie give even further away. And if the Reserve Bank of Australia is even more dovish than they were at their last meeting, where they, chose to pause and said, we don't know if we feel confident enough to keep hiking interest rates, who knows where this Australian dollar can go? All of that being said, if gold bounces back or the Reserve Bank of Australia gets a little bit more confidence, maybe China, which is a close trade partner of Australia, they start to feel a little better. They start seeing some better economic data. This Australian dollar market can pick right back up. So it'll be really interesting to see at this historical price extreme around 64 cents where the market goes. IG clients currently thinking that it will go higher. 79% of IG clients with Aussie USD positions are long Aussie, short dollar. Almost 4 out of 5 traders long that Australian dollar. Will be a really interesting future for this Aussie. The present, though, in a little bit of a crash mode.